Well, it might not feel like it right now, but investing over decades has historically been one of the best ways to generate wealth. Unfortunately, since the 2008 financial crisis, a growing number of investors have stayed on the sidelines, missing out. Well, our countdown closer today says it all boils down to trust. Joining me now is Jordan Kimmel, Value Engine Capital Management's portfolio manager. And Jordan has compiled an index of what he calls the most trustworthy companies in America. And in a year where the S&P closed down nearly 20%, the index ended up about 1%. Not bad at all. So, Jordan, what's the criteria for a stock to get on this index?
Right. It's a great question, Ashley. It's great to be with you. And the headline is trustworthy companies outperform their peers over time, and they do it with less risk. So Ashley, way back, you mentioned the financial crisis, and that was a breakdown in trust. It led to a breakdown in liquidity, and unfortunately, not much has changed. So we didn't really believe in questionnaires and online surveys. You know, I'm a data guy. So what we did is we compiled all kinds of data. The factors that come into it, FACTS is in fact an acronym. So it's financial security and stability, it's conservative accounting, it's corporate governance, it's transparency, and it's sustainability of operations. And Ashley, there are unique data sources to get all of these things and not think about questionnaires, but use hard data to rank the companies. And not only was the 1 year impressive, but the 10-year is far more impressive than the 1 year.
It's interesting. You know, if I'm reading the notes right, you believe we will see a bull market next year. What's your timeline?
Okay, so we haven't really seen the bottom, and I think that's clear. You know, what's going to happen is my guess is sometime in the spring we'll find a real bottom. But again, the headline is, you know, measuring trust is a unique measurement of what we call high quality. And the good news or the simple news, get back to basics, whether it's a good market or a bear market, rising economy or not, interest rates up or down, high quality over time always leads. And so, you know, it's a very difficult market. It's not going to be anywhere near as difficult as last year. But even now, Ashley, with valuations still way down, a lot of the public just doesn't trust Wall Street. All around the world, they're trying to invest in Wall Street, and we're giving them a simple methodology to wade through all of the companies and select and invest in the most trustworthy companies.
While we've got time here, about a minute, Jordan, what are your stock picks? What stocks do you like in particular?
Well, let me tell you what I think is what we're going to see happening. We're going to see some onshoring going on. So believe it or not, you know, manufacturing is going to be good. The large cap pharmaceuticals, Merck, Bristol Myers, Amgen look great. I think that a lot of the insurance companies and the financial companies rank up highly. So things like Morgan Stanley, Ameriprise, even some of the large annuity companies like Hartford looks pretty interesting too. So these companies are all what they have in common. They have cash flow. They have great management teams. Most of them pay dividends. And I think most importantly, what we're learning is chasing hot ideas, meme stocks. Valuation really matters. Quality really matters. And so we're excited with what we have. And we think things will be higher next year. But great to be with you, Ashley.
Jordan Kimmel, great to be with you. So many great pieces of information to share. Thank you.